The Aussie share market is bound for record all-time highs and an IPO blitz could be following. My name is Jessica Amir. I'm a market strategist here with Mumu. It's great to have your company on this 10th day of June. Today is Tuesday. Happy Tuesday indeed. So the Aussie share market is set for potentially a record-breaking week, and investors could be expecting a flood of initial public offerings in the second half of the year. Here's a chart of the Aussie share market, and it's indeed on a tear. But for now, we should potentially focus on technology and commodity stocks. They will probably be in favor this week, with investors thinking, hey, we've already seen positive US and China trade talks, and that might continue. And this will particularly benefit the Aussie share market the most. If we also think about where momentum is coming from and why Aussie stocks are bound for higher levels, we've got positive leads to follow. Indeed, we saw US stocks close overnight at their highest levels since February 21. The Nasdaq 100 is now up 30% from its April low. And we also have, of course, the US dollar index remaining down. It's being it's being held down. It's off about 10% from its highs that it hit in January. So this is good for global trade. It's good for company profits. And of course, it's good for commodity prices because we pay commodities in US dollars. What else do you need to know? Well, the artificial intelligence and battery essential commodities, they're taking off too. Here's a chart of a platinum investment. So specifically, I want you to think about platinum. Now, it hit its highest level since 2021. It's now at $1,214. So this platinum ETF enables you to partake in what's expected to be a continued momentum and continued upside for this precious metal. Platinum, of course, it's key in building out AI and in battery essential investments. The other one I want you to think about is silver. Silver also hit its highest level in over a decade. In fact, a 14-year high for silver overnight, $36.78 US per ounce. Speaking of other commodities, we've also got gold holding steady around about at record all-time highs. Yes, it's still way off its records, but it's holding up there in record all-time territory. And this is particularly because we've got more buying. Specifically, the biggest buyer of gold, China. China's central bank has increased their spending on gold, continuing to buy gold now for 7 straight months. Let's think about what else is pulling the market higher. Well, options are pulling the market higher. We've got bets out there suggesting the Nasdaq 100 will rise up 1% by next week. But investors, as we said, they're a little bit more optimistic about the Aussie share market, expecting it to potentially rise 3.3% by the end of next week, which will see the Aussie share market get to 8,800 points. That'll be a record all-time high. And this is particularly driven by the narrative that we're expanding and exploring today, and that is commodities. So commodity sentiment is expected to pick up this week if we do see the continuation of good talks from China and the US. Keep an eye on the volatility index. The volatility index measures fear and greed. And right now, we've got the volatility index tilting that investors are particularly greedy. So bears, they're particularly whisper quiet, and this suggests that bears could be in hibernation, and we could see bulls continue to buy into the market and pull it up higher. Now, what I also want you to think about is what we're displaying on the screen now. This is the biggest exposure by funds under management of semiconductors, and it's the VanEck Semiconductor ETF SMH. This is listed in the US, but you can buy it down under on Mumu's platform. Now, if US-China trade talks do go really well, keep an eye on this. Locally listed ETFs that you can play on this theme include SEMI, SEMI. That ETF is the biggest on the ASX. Also keep in mind, overnight we did hear that China is expected to release rare earths in volume. Now, this could further boost commodity sentiment and also specifically semiconductors, data centers as well. So that's why I'm saying that you should be keeping your eyes and expecting higher highs on these type of ETFs. But the talk of the town down under remains the IPO boom in Australia. This week, in fact, today, we've got the Australian Securities and Investment Commission are looking to streamline the process of bringing new companies onto the ASX. Now, this is why we might be expecting a flood of IPOs to come onto the ASX if we get favourable findings from this launch by ASIC that's kicking off today. So obviously a flood of IPOs would encourage foreign investment on the ASX, which is great. And that means that's supportive of the risk on bullish sentiment, but also it's great for Aussies as well to get involved in wealth creation. We do know that Virgin Australia is planning to again list on the ASX for the first time in 5 years. Now, this is a great example of IPOs coming thick and fast onto the ASX. Do keep in mind, though, that we have seen Virgin basically say that they're going to launch an upmarket offering. So this will be particularly interesting to see if it can support its share price growth after it lists on the ASX June 24. If Virgin executes their upmarket offering and takes market share away from Quantis, who have got extremely loyal customers, then you might expect higher levels for Virgin shares when they lift. Now, this is a great example. Quantis, we've put that chart on the screen for those tuning in on the podcast. We know that Quantis shares are trading at their record highest levels in history. And that's because they've got stellar earnings growth. Even in COVID, they were still growing their earnings because, of course, they have that loyalty program that continues to see their earnings regardless of flights standing still. Also, I want you to keep an eye on the air ETF. This goes by the ticker code of AIRL. This is an ETF that will give you exposure to the 30 biggest airlines in the world by market capitalization. Here's a side note for you. Quantis is the second biggest holding in that ETF. So there's a very good reason why Quantis shares keep on going up and up. Again, plenty of ideas for you to always consider when you tune into our daily. Thanks for your company.